Okay, thank you for tuning in. Today is Tuesday, the 4th of Nov. We have about a little more than 35 minutes before cash closes, and currently the SPOOs are down 56. Is this right? 56? Yeah. I'm sorry, 77. What am I looking at here? Down 77-ish lower. And I'm going to go over a sequence of trades I did. 0 DTE in the SPOOs starting this morning at about 640. Okay, so early this morning, the market was near the lows, and it appeared, at least in my eyes, as if it could pause the downturn for a little while. So at that point, I decided to sell put spread, 0 DT put spread, and the SPOOs. And I did in the market. Let's take a look and see what time that was done. Shortly after the open. So that was done at 6:40 a.m. And these are the prices without commission. So I sold a 7065 put spread, 67 handle, by the way. 1903 and 1693. So I got that off for 210, and then not 15 minutes later, 12 minutes later, I bought the 7570 put spread for $1.20. So note that I sold the 7065 for 210, and then subsequent to that, I bought the 7570 for $1.20. So there's a $90 credit for a butterfly, with the center strike being at 70. All right. So the way that looks, let me go to this one. Is here I have it queued up. This is just a basic put spread. I guess you can call it a bullish put spread. And then a few minutes later, I converted it to a butterfly by doing the following. So I bought the 75 and then I sold the 70. So that would leave me with the 70 as a center strike on this butterfly. And remember, the prices were the first put spread I sold was for 210, and then I bought the 7570 for $1.20. So that leaves me a credit of $90. So worst case scenario is if I were to do nothing, then I have a butterfly on for a credit of $90. This type of setup might be fine, particularly for those who have PDT concerns. So if you don't want to step on strikes, you could do something like this and just let it go and not worry about exiting or peeling off the butterfly at any time after you have it set up. And of course, just getting out of the 7065 is also fine. And if you don't have PDT concerns, go ahead and do that. Maybe that's what you want to do. But I decided to convert this to a butterfly. And the reason that I like to do these, I don't always do this, but I like to do these, is just in case the market returns to the original scene of the crime, so to speak, then I have a chance to sell this butterfly. Now, after I converted this to a butterfly, the market continued to rally. So I probably could have bought this 7570 for less than $1.20. I'm assuming I could probably have bought it for 90 or 80 cents, which would have given me more of a cushion, bigger credit overall, but that's fine. All right, so I have the butterfly, and after that, what I did, and this was roughly 45 minutes ago, I ended up selling the butterfly for 70 cents. So the total credits would amount to $1.60 for this, because the first thing I did was sell a vertical for 210. I bought one converting, morphing this into a butterfly for $1.20. So that leaves me a 90-cent credit. And then I ended up selling the butterfly for 70 cents. 90 and 70 is $1.60. So this sequence of trades ended up being worth $1.60, $160 minus the commissions on these. So this, again, this is one of many ways to deal with vertical spread. You can exit the trade, the original trade. You can convert it into something else. I could have turned this into a short butterfly by, instead of purchasing the 75.70, I could have purchased 65.60, and then I would have been short the butterfly. But in this case, I didn't want to do that because I was a bit suspicious of the market possibly returning again to the scene of the crime, and then I didn't want to have on a short butterfly, which I could always wiggle out of. That's not a problem, but I didn't want to have a short butterfly in this case, so I chose this formation. I chose to construct it this way, and again, this construction leaves getting out of the original position, which I'm free to do because I don't have PDT concerns. I didn't get out of the original position, so again, I turned it into a long butterfly as opposed to just getting out of the original spread or turning it into a short butterfly or even turning it into a condor by purchasing, let's say, 85.80 put spread or an 80.75, something along those lines. So this could easily have been turned into a condor. And I could have done that if I would have been a little more patient on the early morning upswing, which, let me take a look. It did rally all the way to 20, I want to say. Yeah, right about 68.20. So a decent 50 handle rally within an hour after the open. So again, these are possible ways to deal with verticals. And for those who have PDT concerns or issues, if you don't want to step on strikes, it's very easy to convert vertical into a butterfly or a condor. And you could always step on the other side of the ledger and box it off with a call spread and do the same thing on the other side of the ledger by turning it into a synthetic butterfly or a synthetic condor. All right, that's going to be it for today. I hope that was helpful. Catch you guys next time.